So, as Lisa and Matt introduced, natural resources are one of the most important inputs to the global economy. There's huge potential to invest. There's that real need for funding that we've heard about. And what we're here to discuss this morning is that a credible opportunity? What is needed in terms of policy change to ensure that we maintain the credibility in that market space? So, Rich, I'd like to start with you. You're one of the only people I know who I might consider swapping jobs with. You're running around the country at the moment, buying up some really incredible bits of land across the UK with a view to delivering environmental and financial returns from those. So where's that financial return coming from, and what do you see as the most compelling opportunity in the market at the moment?
I quite like my job, so thank you. The financial return. So this is the question I get asked more than anything probably. How does the model work? How are you going to make nature and the environment pay for itself? And the reality is there isn't one simple answer. And in looking for it, there's a risk we're going to repeat the mistakes we've made before. We're going to force ourselves on the natural environment. We're going to put the wrong type of agriculture in the wrong place. We're going to decide we want to develop a piece of land that doesn't do that and shouldn't be used in that way. So what we do is we find really precious landscapes, all those that need improvement, and we look and learn and listen from them and from local communities, and we let the environment tell us the right thing to do in the right place. So in the right place, that might be renewable energy. In other places, it might be property development and ecotourism and welcoming people into those communities. And in other places, it is natural capital. But it's not one answer, and it's about working with the environment and with the local community to find out what the right thing for that place is, and each one is unique. And you asked about the most compelling market. So to flip that slightly, everyone will talk about carbon at the moment because that's what the money's rushing towards. But before you buy a carbon credit or consider any form of natural capital product, just assume it's bad. Just assume it's bad, it's failure demand. We shouldn't need them in the first place. If we followed the Lord's awesome speech this morning and we reduced and we removed carbon and we made the changes we need to make, we wouldn't need to buy offsets. The reality is we're going to have to, though. So when you look at that credit, assume it's bad unless it is delivering positive environmental and social impact. Only then can you really know you're not buying the next Volkswagen scandal. You're not buying greenwashing. So be really suspicious and go meet the teams who are offering those projects, go see the land and understand the reality of what you're investing in. So at the moment it's carbon, but you can't separate them. If we're really going to do natural capital properly, it has to be embedded, it has to be bundled, it has to be offering a solution from a sustainable perspective in terms of carbon and biodiversity and full impact for that local community.
Ruth, how do we stop? How do we ensure that we're efficiently planning land use and not displacing food production where we need food production to deliver some of these outcomes?
That's an interesting question, and actually reflecting on something that, part of Lord Debon's speech this morning. The way in which we've approached agriculture has actually taken away from natural capital. So when we're looking at the natural capital solutions, and actually part of what you're saying is protecting nature has got to be the fundamental core of what we're aiming for. So the business that I'm involved in, when we're looking at the right land type, we're really careful about selecting land that it's a bit ropey, isn't good for agriculture, and actually we can really deliver positive natural impact from that land. But we've also got to be really careful about the custodians of land and our stakeholders, who largely are our farmers, because we want them to be retained in this supply chain to make it work. So that means making sure that they are comfortable with putting their land to use for the 30-year term, and it actually forms a really sustainable part of how they're going to grow their farming commitments and their diversification. I think when you think about agriculture specifically, I've got some stats, I never remember them, but the total agricultural land area in England is 9.3 million hectares. And if you look at the sort of annual biodiversity need, we're looking at 0.04% for habitat creation every year. So we're not displacing mass agricultural land. But again, back to Lord Debon's comment, the businesses that we're involved in are focused on restoring nature. And we can't do all of the other things to make agriculture better other industries need to play their part. From a fund perspective, I work in the sustainable infrastructure team, and one of the thematics we work through is trying to find better resource efficiency. So not only are we doing nature regeneration, but actually through resource efficiency we're building vertical farms, which is trying to revolutionise the way we grow food, where we're growing in 1 acre of vertical farming what it takes 250 acres of field. So that's part of the solution to allow for land change, but we need more people to be doing different things. So that's sort of a long way of saying I think natural capital and farming for nature can be the main objective as long as everyone else plays their part.
Lee Young, how are you thinking about these sort of balancing these priorities in your investments when you're thinking about timber production and carbon and trying to optimise financial and environmental outcomes in those sorts of investments?
Sure. The most important factor we everything consider is additionality. So what kind of additional impact or value you're creating to your climate change or to your net zero investors. So for example, we're trying to be mindful, creating native woodland, not in the land side suitable for agricultural purposes, because while you're creating value here on the carbon side, also could be undermining your very important factor in your society. Similarly, we're also very mindful creating, mixing with the commercial forestry with the native woodland, because again, while you're capturing carbon from atmosphere, while you're harvesting the timber. So it needs a really delicate balance, I would say. But the most important thing is how to measure it, because the measurability is the most important factor that our investors are looking at. We want to get into net zero today, but it's pretty difficult. What investors want to see is the journey as to how to really get to the journey with the right KPI and how to meet the KPI. So on the native woodland forestry side, everything follows the woodland carbon code calculation methodology. And on the biodiversity net gain, we are actually partnering up with the National History Museum for the pilot project to really really create this biodiversity matrix. So, which is actually going out very well. So yes, measurability is the most important.
Fiona, how are your clients thinking about some of those sort of philosophical issues around credibility in new markets? I'm thinking things like carbon removals against carbon abatement and averted loss schemes. What sort of themes are you seeing?
So I suppose in terms of quality, the first thing to say is offsetting needs to be done as part of a holistic and credible net zero policy. So that means deep emissions cuts first. But there is still space for use of offsets, and for example, in net zero building claims. And also we are seeing clients looking to go beyond what they're required to do to get to net zero, but investing in nature-based solutions projects anyway. So that's, I suppose, the the first thing to say about that. But also corporate strategies are about more than just carbon, as we've been talking about. So looking at other environmental outcomes like biodiversity, also looking at socioeconomic outcomes. It's increasingly the sort of whole package that people are interested in. So people are really alive to the quality issues. There's been so much in the press about it, it's hard not to be. So I think we're seeing clients certainly asking us to do due diligence, legal due diligence, on top of their technical due diligence, looking across a range of factors to say, well, what are these offsets going to be used for? Do they meet the requirements and the criteria for what they're going to be used for? And is it a high quality project? Can you credibly stand behind it and say that this project is doing a range of goods and is sequestering carbon in a way that is clear, is measurable, and is credible? As specifically to the removals versus, say, avoided emissions aspect, the Oxford Principles for Net Zero aligned carbon offsetting very much focus on that move away from avoided emissions into removals, which is clearly important, but simply because something is a removal project doesn't necessarily mean that it is also a high quality project. So we are definitely seeing more interest in removals, but it is about assessing that underlying project as a whole And likewise, we have clients who do see the value in avoided emissions. So certain projects around, for example, tropical forest conservation and protection, restoration, some of these projects can be high quality projects that deliver a range of other benefits if you're not just focusing on the carbon piece. But ultimately, you need to know what you're buying, you need to know what you're using it for, and you need to know how you're going to use it and report against that in a credible and high quality way.
Thanks. Susan, what sort of challenges do you think need to be overcome, and in policy particularly, to increase landowner engagement and participation in these markets?
It does feel that we're in a bit of we're at the start of quite a long journey, I think, here with getting landowners engaged. We've got pioneers, there's a few in the room just now, who are actually doing some amazing projects, and there's an increasing portfolio, I think, of really interesting, larger scale projects coming online, and I think that's part of what needs to happen, is having some really good examples of how this is working and making it work. But somehow we do need to move from this sort of perpetual piloting to actually this market really, really becoming sustainable and established. I mean, we have got a few problems, things like the context we're operating in, the agricultural policy is all up in the air, not really sure about how, when people are making choices about what to do with their business and a particular block of land, they want to look at all the options, and some of the options just aren't clear yet, and even in these markets, they're not 100% clear yet either, and there's still, it feels like there's some evolution still to go in the marketplace. There's a language barrier as well, I think, that needs to be overcome, and that's partly about developing the skills and knowledge within the landowning communities. I think it's also worth saying that when you think of landowners, they're not one homogenous group of people. You've got institutional landowners, there's the traditional estate, and there's lots and lots of small farmers as well. So all with different objectives, all with different priorities for their business, and different land types and so on. So you can't sort of think of them as a homogenous group that will all operate in the same way. What they're worried about is how to access the market. We're getting increasing numbers of calls now about how to access the market. I'm hearing a lot about this, but what do I do? How do I find out about it and whether it's suitable for me? Need to address that skills and knowledge gap. And that's part of that is the capacity of the advisory sector as well. The need to collaborate. We heard this morning about projects needing to be big. So how do the smaller landowners engage in this, and where this is about collaborating, and there's some really good examples starting to come through of farmers collaborating and working together. It brings a whole host of other legal issues and tax issues that need to be resolved as well. And the current pilot scheme, the DEFRA pilot scheme on landscape recovery, I think is going to flush out a whole load of issues. We've had chats with a couple of the projects that are going through that process. They've got a 2-year development process, and I think that's going to flush out a lot of these collaborative issues, the legal issues, the tax issues. But that will help to then establish good processes and learning for everybody to make good projects. So I think that's a really good place to start. But clear information from DEFRA about the policies, and Wales and Scotland, clearly they're in a slightly different place with their policy development. Because for a lot of people, the first place will be to go to the government schemes. But they need that information before they can decide what the options are and whether the private sector markets are right as well. Addressing the tax issues, particularly around inheritance tax reliefs, is going to be key if you're going to get larger blocks of land coming in. And then addressing additionality, which is very confusing for most people. No dispute about it's got to be additional benefit, but it's the financial additionality around woodland carbon code in particular that can be problematic. And I think the other thing government could do is think about doing some sort of natural capital baseline assessment, either at a government scale or helping individual landowners to do one on their own property. And that would get a national baseline from which we can all work and springboard these markets. It would be part of that training aspect as well.
Okay, Laura, so clear guidance from government, you heard it. I was really interested to read about the big Nature Impact Fund last week. How do you see the government seed capital leveraging additional private investment into this space?
Yeah.
Sorry, George.
Yeah, I'll just come back on what Susan said, just say that we are working really hard on all those issues, and definitely want to get clear guidance out soon on all the schemes and how they work together, just to give landowners that clarity, because we really appreciate that that's important. So last week we launched the Big Nature Impact Fund at COP27. It's really exciting. I think it's the first time it's been done domestically, particularly for nature recovery. So it's a public-private blended fund. DEFRA has put in 30 million, and that de-risks the fund for anyone else wanting to invest. We have hired private fund managers, so Federated Hermes and Finance Earth are managing the fund for us. It will aggregate all these small-scale projects that are doing woodland, peatland, biodiversity net gain, aggregating them into a pipeline that's ready to invest. And it's going to be really great for the biodiversity net gain market, because it will just kickstart those habitat banks that we need, so they're there ready when developers need them from November next year. So, yeah.
Thanks. One of the things I'm interested to discuss is sort of financial return requirements, and when you're, Rich, if you start on this one, I mean, when you're looking at investments, are you taking lower rates of return than you might otherwise expect in sort of comparable forms of investment because of the environmental outcomes they're delivering? I mean, how do you underwrite a new acquisition when you're looking at the potential?
Yes, we are taking a lower rate of return, and we all should, because we've taken too much from the planet for too long. If there's a conflict between economic return and environmental impact, and you have a problem with that, invest with somebody else. We're oversubscribed at the minute. We can't take any more investment anyway. We will do environment and social impact first and generate profit as a result of that, not the purpose. We've tried everything else and it doesn't work, right? So environment, social first, generate a profit as a result of that, and accept you will make a lower return investing in natural capital right now with a potentially higher upside, but we might have a future planet to live on.
Yeah, I mean, Lee Young, is that how you're viewing things, where you're looking? I mean, if some of your investments, my assumption is that some of the investments you're making in forestry or carbon projects are there to help offset or rather inset environmental impacts from the wider investment portfolio. Is that the case? How do you view the financial returns from those?
Yes, that's $1 million question, isn't it? So everything, I'm part of the real estate, so we do also invest in real estate. So how do we really look at impact return? So number one is obviously potential premium, whatever rental, whatever value premium. Number two is what's the gain versus what we call brown discount. So if you didn't do it, what will be the damage that you're getting? And then by how do we really gain it out of the liquidity issue and discount issue? So the return will be the combination of this premium and brown discount. But if I look at the current impact return benchmark from B Finance, I think, in fact, the current real estate impact return is actually quite pegged to the market. So it doesn't really provide a discount. And investors are still expecting similar return from this type of impact product, which is slightly contradicting. So especially in the context of a natural capital, I mean, yes, one way of looking at it is to look at the carbon price inflation as of today and in 2050. And then probably if you look at the inflation hedge as this product, then perhaps you get some financial gain. But again, is that enough? I mean, what are we trying to do here fundamentally, like Lord mentioned? I mean, we're trying to do a good thing to this planet, and the reason for this. The most important driver from our perspective is we're looking at the investor who have a very clear net zero target. And then those kind of investors already have done their own carbon study, meaning their pathway. And then by the time they want to declare net zero, let's say 2030 or 40, they know pretty much how much they need to offset. And then basically we are helping them today by growing the forestry trees and also locking in some cost to help them. So I guess there's a unqualified benefit here, which needs to be reflected in the return, because we're not talking about pure financial product here.
But hedging future cost or liability.
Correct.
Removing that liability, yeah. It's interesting. Fiona, have you seen some good examples of similar sort of insetting projects that your clients have been engaged with?
I mean, in terms of insetting, we've seen one of the big ones is palm oil supply chains from an international perspective. So there's a mechanism called the RIMBA Collective, which effectively brings together a number of users and parties within the supply chain for palm oil to invest in a portfolio of projects, a growing portfolio of projects around effectively tropical forest, afforestation, reforestation and conservation. So trying to effectively leverage at a greater scale both the demand for those types of project, or a clear demand for those types of projects. But interestingly, it was based mostly around biodiversity rather than carbon. So the principal outputs from that perspective were around hectares afforested or restored, and what the biodiversity benefits of that were. And of course, we're still waiting for a biodiversity credit, which I think will be helpful in terms of enabling a bit more transparency around the reporting on those types of benefits.
I mean, I know one of the really big challenges in that particular space is audit process and verification, particularly on the sort of scale that some of those markets function, the palm oil sector particularly.
Absolutely.
I mean, have you seen some particularly good solutions that give your clients confidence in that?
I mean, essentially the situation you're in at the moment is if you want to have a mechanism based around biodiversity and there isn't a credit, then you have to develop your own processes for doing that audit and to make that effectively bulletproof from the perspective of making claims based on it. So yeah, it's a kind of a bespoke approach, I suppose, depending on what the KPIs are that you're looking for. But it's a really, really important aspect of it. And between that and I think governance to ensure that that quality remains, those are the two of the kind of key challenges for that type of portfolio approach.
Ruth, what do you think are the sort of key threats to a well-functioning natural capital marketplace?
Well, actually, picking up on what Fiona said, if we focus on England and biodiversity net gain in particular, having really clear standards and a really sort of level playing field for participants, I think, are absolutely key. So I think the Environment Act has given us a regulatory framework that certainly for Gresham House and presumably for Oxygen as well has given us the confidence to start investing patient capital. So to the point about, are we compromising returns for impact? I think we don't feel we are because of the type of capital we're investing. It is patient and we're taking a longer term view. So we're able to sort of do these projects where we're not generating revenue at the outset, but we're building that sort of pipeline. But to make sure that this private capital can keep coming into the market and fill the big funding gap, we really need clarity around regulation. And I think it's really helpful that we're going to have the metric, we'll be having conservation covenants and the register to give everyone that level playing field. So my habitat bank's as good as your habitat bank is as good as Bob's bespoke habitat bank, but we need to have that level playing field. Otherwise, we're going to end up in some of the sort of the grey greenwashing area, and that's what will be really damaging to the market. And fundamentally, that's what will compromise the nature outcomes. I think we all agree that we need, and they have got to be the things that we put at the really heart of what we're trying to achieve. I know when we spoke in our prep call, it was, what is biodiversity net gain about? Is it trying to achieve a social outcome? There's lots of other factors that could play into what we're trying to achieve. But if we focus on nature, then I think that gives us our real North Star of how we are going to deliver a positive outcome for nature.
So back to policy guidance. One of the things for me in biodiversity net gain that I don't think policy yet makes adequate distinction between the importance of naturally, publicly accessible natural green space available to the occupants of a new development or the local community that's been affected by it, as against truly strategic ecological outcomes, which is, the stated intention of the policy. And actually, certainly local policy can often give priority to that, accessible natural green space over the, and it ends up developers trying to squeeze every last little bit out of a scheme, planting vines at the gable ends of buildings, things like that don't actually deliver, strategic ecological outcomes. I mean, do you think policy will ultimately intervene to try and strike that balance?
Yeah, I think there's a range of views on how biodiversity net gain should operate, and you do have quite polarised views. You have people who think it should be there to make that development better for the inhabitants and the local community and make sure that people living in towns and cities aren't losing that green space around them. And then there's, well, we're going to have this great source of funding. What can we do with that? Let's do the strategic joined-up schemes. I mean, we kind of need both. We have the mitigation hierarchies. We want to see things being done on-site first, then off-site locally, and then if you can't do that, further afield. If you can't do that, then you've got the government credit scheme, which will do the much bigger joined-up strategic projects. I mean, I would just push back and say that you won't, the way the metric is designed, you won't get good results for doing a vine up a wall, a green roof. Those are very low-scoring habitats, so the aim is not to incentivise those. Great if you can put them on site and you can achieve your net gain that way, but that's not the overall driver. So the metric hopefully will steer. It's being refined. There'll be a new one soon, and that should hopefully bring the outcomes that we all want to see.
Susan, when some of the landowners, the CLA's members, are thinking about engaging in some of these markets, how are you advising them around the issue, you know, where they may potentially need some of these environmental outputs themselves to satisfy, for example, you know, consumer demand where they have an agricultural business and you know, there's increasing expectations for, you know, things like carbon neutrality in supply chains. If they are selling those outputs prematurely, you know, they may not then be able to satisfy, you know, the requirements of you know, potentially more important customers they have within their own business. I mean, how are those things being thought about?
That's probably one of the most common questions we get asked when we talk about net zero and agriculture, is do I need to, and carbon credits or carbon offsetting. At the moment there's no requirement to be net zero before you sell offsets, but we do advise people that they should think longer term about what they might want to do with their business. I mean, many of the businesses are actually aiming to get to net zero themselves. I think we always have a bit of a problem with agriculture in that most farming businesses have agriculture, but they might also have forestry and other habitats and environmental habitats. They might also have diversified businesses. So there's always a question of, you know, it's their business going to net zero, but then the government inventories are about agriculture and land use, and they're separate. So there's this mismatch between how a business might think about net zero and how government thinks about net zero, and that can lead to a lot of confusion, to be fair, about what they should be doing. So, and whether they can do their internal offsetting within the business, which is what we talk about. But then when we're talking about agriculture as a sector, as you know, an inventory sector getting to net zero, which is what the government's looking for, that's a real challenge without doing some internal offset calculations. So it's much easier to think about the business, and we think if we can get the businesses to net zero, then that would be the place to start. But at the moment, there isn't any requirement to be net zero. I think the businesses that are looking at doing offset credits, whether that's through peatland restoration or woodland, which are the most common ones at the moment, they're tending to take a long view and think through that and only offset what they think they know they can do without on their calculations of net zero now. But other businesses are, you know, they may be saying, you know, I'm going to take the opportunity when it's here now, because it might not be here in 15, 20 years' time. So take the opportunity now. But that's a business decision that they can make themselves. And if their supply chain then demands them to be net zero, then they're going to have to look at how they manage that in the future.
You didn't mention soil carbon credits. I mean, it's something that's being talked about a lot. I mean, do you have a policy position on soil carbon credits and, you know, permanence issues, and would you encourage members to participate in those?
What we're advising is that you consider carefully what the contract is for. So if it's for offsets, so you're selling your offset and you cannot use that for your own use, then we'd say go forward with extreme caution. But a lot of the soil carbon codes or soil carbon offers that are out there are actually third-party supply chain people that are offering to pay you to help as part of their scope 3 emissions to help you to reduce your emissions, in which case you can still use that reduction and you're almost getting a verified reduction that could help your own net zero calculations. So I think it's being crystal clear about what it is that what your agreement is about, and if the contract is not to offset rather than to be paid to reduce your emissions as an inset, then we're saying that's okay. But there's an awful lot of nervousness. A survey we did in the summer, there's only 2% have even considered selling carbon now, and only 15% were thinking about doing it in the next 2 to 3 years, of soil carbon, that is, because it's not got the integrity qualities that might be required in other carbon for true carbon offsetting.
Rich, that's something we've talked about for hours on end. Credibility of carbon markets. What's your position? I mean, I know it's going to be a big part of what you're doing, and you've been acquiring land with a view to, ultimately creating and selling carbon credits. What's your position on that? Again, abated loss, sequestration.
I think the reality, people need to see what they're buying and believe it and understand it and have credibility of it. So we're working at what our sale contracts look like at the moment, and we're in a really fortunate position that we're oversubscribed for the carbon we currently have in our land holdings. So we're sat on around 25,000 acres nationally, and that's been bought over the last 12 months. And every element of carbon we currently or can sequester, we're oversubscribed on. More people want to buy it than we've got it, which is wonderful. The reason that is because we're saying, come and know your carbon. In the same way that in investments you have to know the client you're working with, come and know that carbon, visit the site, have the right to come and see it, to walk the land, to know what's truly there. And I think that's so important about the integrity and especially a unique selling point of natural capital products in this country.
Yes, premium price carbon, presumably, to...
It was described as reassuringly expensive. I can work with that.
Susan touched earlier on additionality principles. I mean, I think I can understand why some people think it's an incredibly complex area. I mean, the basic principle is actually a very, very simple one. Really, where you're looking at building habitat banks, for example, and working with landowners, are you thinking about trying to stack, multiple income streams from particular initiatives?
At the moment, all of our investment thesis is based around biodiversity net gain because we know what it is, and to your point, we can quantify it and we can be really authentic about what it is we're selling. We have lots of conversations with landowners about stacking and the potential for additional natural capital to be deployed, to be exploited in the future from the same area of land, but we're very cautious about it. There needs to be some clear guidance about what is possible to but what is right to stack and bundle along with each other. I mean, I think bundling and selling to the same person might be easier, and certainly whenever we're looking at selling biodiversity net gain, say, into a corporate market rather than a statutory market, we can offer reporting on different aspects rather than selling you a badger along with your tree, because that is quite problematic, and there is a real problem with additionality. And I think the way we're approaching it is with a lot of caution, because I think if we start losing the authenticity in our product, then we're not going to have a very defensible product going forward. So it's with extreme caution. But we know that we have to build our sales contracts and our contracts with our landowners in a way to reassure them that we're not just paying them for one service and then we're going to run off and monetize a load of others, because that's something that the landowners really are concerned about. So there's a skill there in how we deal with our contracts with landowners to make sure that they feel that they will be benefiting from any additional markets that may come forward in the future, as long as they're appropriate.
So important.
I mean, it's interesting because I think there are relatively few instances where you can genuinely identify meaningful additionality or opportunities to truly stack one outcome very distinctly on top of another. And when you are thinking about that, it's actually quite interesting as to the sequence with which you do it. So which one is your sort of principal primary market that you're selling something into, and then that then gives you the starting point for your additionality for the next. I mean, is that something you think we're going to see more clear guidance on? Is that
Yes.
in terms of examples? Because it's one of the things that people I think really do struggle with. Certainly we're seeing, just very recently actually, we've seen a huge emergence of where we're agreeing leases, for example, for large-scale ground-mounted solar projects. Landowners saying, well, we want to reserve the biodiversity net gain benefit. Reality is, the developer's going to deliver biodiversity net gain for the project. That's committed. The prospect of delivering any more, anything meaningful that could deliver a real financial value over and above what's been committed anyway is incredibly slim. And then trying to contract it's just so I think there's a lot of misunderstanding about there's an outcome, we're going to get some money for it. So I mean, where are we going with that?
Yeah, no, I appreciate all those views. Something I spend probably 80% of my time working on is this guidance, and there's an awful lot of players involved and different markets, and some aren't government and some are, and it's very complicated. I mean, my advice would be, if you're doing biodiversity net gain projects now, make sure you can finance them in full and don't rely on that extra income, and then we'll see where we are. But don't start assuming I can stack this and carbon and nutrients and everything on top to make it financially viable. It needs to be financially viable for 30 years for B&G, and then we will hopefully have some clear guidance out shortly. But good to hear all your views on it now.
Rich, when you're sort of looking at a new land purchase and you're trying to quantify, before you can even place a financial value on it, the range of environmental benefits that it has to deliver, how do you go about identifying, quantifying, prioritising individual opportunities, and what is the optimal use for a potential piece of land?
Perfect. This is where I take to the corner and put a deck of slides up about how our modelling software works and our approach to that. My background is remote sensor monitoring, so PhD's half data, half environmental stuff, which when I did it, everyone was like, why on earth would you do those two things? Now they're like, what a great idea for a PhD. So I got lucky with that. The reality is we do a huge amount in terms of remote sensing data. So we've built an algorithm that when we look at a shapefile for the site, which is why land agents love giving me them, we can screen them in the space of 90 seconds for every different habitat type, land use transition, run loads of different scenarios there to test what would be the right thing for from an economic side of things, and also deliver the best environmental impact. And then we test that locally. If a site meets our set of screening criteria, we will then talk to wildlife trusts and rivers trusts and some of those wonderful organisations in local areas to say, what do you know about this landscape? And once you start really interacting with those local communities, that's when you really understand and find out about the places. And that allows us to rank the opportunities across the country. In the last 12 months, we've looked at somewhere between 250,000 and 500,000 acres to buy 25,000. So that's the level of screening we're putting through the funnel. Can I just make one point on the clear guidance as well? Can we all remember when we're sat in this room next year that when the guidance comes, none of us will like it? We'll criticise it, we'll pick fault with it, and we'll try and game it. So yes, we want it, but the reality is you can't please everyone with it. So thank you for trying, but we're all going to complain about it anyway. So if we just do the right thing for the environment and try and deliver positive environmental and social impact, we're going to make a profit of that and maybe have a future of life on Earth. So thank you.
Susan, do you think this is a bubble that's going to pop?
There's certainly, I think it depends on how big you think the bubble is to start with. And there are lots of big figures being talked about, that gap of funding, some big figures, 4 billion a year, isn't it, in England? I forget the figures that were up on the slide earlier, but there's a big gap annually. And if the private sector funding, these private sector environmental markets are going to be able to fill that gap, then that's quite exciting. In the rural economy, a lot of businesses are under a lot of pressure with the changes in agriculture policy, the profitability of agriculture it feels like there's a perfect storm if you're looking for some alternative income streams. But the problem is, for most people, or for many people, biodiversity net gain, nutrient neutrality, very place-based, not an option for everyone. Carbon, not suitable everywhere, to put in trees. If you've got to have peat for a start, if you've got to do peatland restoration, so that's very place-based as well. And woodland's not suitable everywhere either. There may be other localised opportunities, things like some of the DEFRA schemes. I mean, don't forget with all this, there's around about £2 billion in England annually. We hope continuing to come in through the environmental land management schemes, and Scotland and Wales will be doing similar. So there's that agri-environment scheme baseline that will continue, but this is to ramp it up more. So there's big figures being talked about, but for an individual landowner, it doesn't always come through to that opportunity. And that's why maybe, while some of our members do get a little bit concerned about the investors coming in and buying land, for some, if you're a hard-pressed sheep farmer up in the hills that's suitable for trees, that may well be the best option at the moment. So there are opportunities there as well, although that, often that can be controversial with some of our members.
As Matt said, at least they're selling their farm for 3 times more than they were a few years ago.
Yeah,
So.
I think some of the thinking around the carbon market, I'm not an expert on the carbon market going forward and pricing, but there's an expectation that prices will go up. But there's also likely to be engineering solutions that will come through that may dampen that market. So it's a very difficult one to call. I mean, I think the nature crisis and the carbon, the net zero are real, and that is going to be the fundamental drivers. And there's a lot of statutory, the legislation around biodiversity net gain is real. So there are some real foundations to this market. It's not completely, pie in the sky, but it's not going to be necessarily the opportunity that everybody thinks it will be.
Right, we've got a couple of minutes left, and we've got some questions on Slido. So let me just have a quick squiz through these and see. Okay, so farmers control the vast majority of land. It cannot all be bought. Rich. Is the biggest problem the panel faces finding a way to engage with farmers at scale? So,
Well,
Ruth, you're engaging with, you're not buying land, you're working with landowners to deliver.
Exactly, and that's been a really key part of when we started trying to build what for us was a brand new infrastructure asset class, was how do we do that at scale? And I think there's going to be a place for buying land. Certainly with nutrient neutrality, I think for us to be able to commit to the outcomes from nutrient neutrality, because it needs to be 80 to 125 years, we're going to have to buy. But for biodiversity net gain, where the permanence is 30 years, that lends itself to a leasing model, and that then lends itself, I think, better into typical landowners who can take long-term views. They're used to taking long-term views with solar and other projects, but they are able to retain some element of control and connection with their land, because that's really important. And actually we're trying to, where it does work for certain landowners, make sure that it does work for them, gives them a diversified income. And frankly, with a lot of this land, it will remain useful for grazing, for example. So we need those farming interventions to continue to help deliver our habitat management plans. So absolutely, we need the landowners to be part and parcel of the delivery solution. And we've worked really hard to create a model that allows that to work, that does answer some of the challenges around inheritance tax and so on. And it's not easy, and it doesn't fit for everyone, but it is there, and that's what we're trying to do, because we think that will then create a defensible market for our product.
Lee Young, is that something you'd consider in terms of co-investment alongside existing landowners to try and so you can put capital into delivering those outcomes and get the return and potentially the environmental benefits that derives?
I mean, currently 2 ways of looking at it. Number one is you purchase land outright, or you lease the land site in the long term, basically sharing the benefit together. So, but coming back to, I would call this engagement with the landowner, engagement with the community, which is so extremely critical. That's why Aberdeen trying to put maximum control into the process from the planning permit and planting and etc. Otherwise, you are easily subject to reputational risk, because it's corporate. Although we are trying to do the good thing, people, the landowner, the farmer might think that corporate is going to buy the land, but that's not the whole point. So for the land side we are purchasing or leasing, we absolutely try to maximize hiring the people living right next to it, because they need to be a full-time on-site to really manage the process. And then we're also trying to do what we call eco-tourism. So bringing their local school students, coming to the land site, see it, have them see it, and showing them what we're trying to do. So community engagement and landowner engagement is the most important thing from our perspective.